going on, guys? So today I just wanted to go over just looking at TradingView, looking at the Forex market, not really using any over the bar terminology, nothing too crazy, just to keep it simple. So we're on TradingView, we're looking at GBP USD, we're on a daily time frame, and we have bull candles in green, which means the market is going up, and bearish candles in red, which means the market is going down. This is a moving average, the 100 moving average, and this just tells you the average of the market. Every candle here, since we're on the daily time frame, is a day. So bearish candle one day, the next day bull candle, so on and so forth. This is called a stochastic oscillator. Big word for just telling you when the market sold too much or bought into too much. So when it's below this line, that means the market wants to go up. It doesn't mean you just look at this and every time this is down here, it's going to go up. You have to use more confirmations. As with any analysis, you always want to have as many confirmations as possible that make sense. So this tells us when the market is oversold, as it is right now. If it's outside the shaded area, it means the market is oversold and it's going to turn around. We can expect to see some type of bullish momentum or market going up or buyers coming into the market. So why did this happen? We see the market is playing around here, not really going too high up or too high down, right? This is called consolidation. Consolidation meaning the market is just playing around in a certain area. So look at this. We have this area and we have this area. So we can expect to see the market to play around within this area. Now, the trend is your friend. You see the market going up, playing, and then breaking out again to the upside. So you always want to trade with the trend. Why? Let's say you sold over here because you saw it wasn't going up anymore, right? And then look what happens. Yet if it came down to this area or this area, we can expect to see what's going to happen because it did it before. You want history, and going back is history. It's gathering more data. It's seeing what you can anticipate to happen. Now, when people ask to find zones, this would be a zone and this would be a zone. This would be support, this would be resistance. Why? Because the market comes to this area and turns around. See? And on top here, you can find these all around the market. Find areas of key zones, and it's pretty much wherever you see the most reaction, opposition, basically reversals, the market turning around. Whenever it comes to a certain area and it turns around and gives you some type of reaction, that's a zone. The more times it comes there, the better. That's a zone. Keep that in mind. Now, looking at GBP USD, I want to show you guys something. This is the weekly, right? On the weekly time frame, we can also see market going up. It's been a good ride, a really good ride. And then you see this big impact to the downside. See these wicks? Wicks tell you that the market failed to close above or below previous price. Now, for instance, see this red candle, this big impact over here? This is telling us that the buyers were in the market and we're on a good ride, and now the sellers overcame the market. So this is one confirmation. If the next candle is bigger than the previous candle and it's large like this, then we can expect to see more sell momentum. Another thing, the market is overbought. So now we have a bearish engulfing candle on the weekly time frame and the market is overbought. So overall, long term, we can expect to see the sell for this pair. But on the daily time frame, we're going to see some bullish momentum or the market going up. This is why we wait for our action. We wait for confirmations. You want to gather as much as possible. And if you lose entry for the trade, then there's nothing wrong with watching a trade go by and making sure your analysis was correct. What if it was wrong? If it don't look good, don't enter it. Now, I'm not going to go into an analysis over this pair because yesterday was Christmas. The market starts to set back up for itself. But you can see, I just wanted to show you guys how to identify a zone, what to look for, give you a couple hints, a couple clues, just by looking at the chart. This candle is bigger than this candle. It's on a bigger time frame. Every candle here is 1 week. So this week, or sorry, last week, now we had a big breakout to the downside, right? So now we wait for the market to come back up, which is called a pullback, and we would take this for the downside. Now, only with more confirmations. And I want to stress that because I don't want it to seem as though we're giving out an analysis right here and then, and it doesn't go your way. This is just for teaching purposes, just to get you affiliated and acclimated with what to identify, what to look for, what time frames, what pairs, how to use an indicator, how to tie things together. Once you get all that down and you practice patience and discipline, you'll really be able to finesse the market. That's it for today, guys.